Today let's talk about ZSE Holdings, the company that owns both of Zimbabwean stock markets, the ZSE and the VFEX. On the 9th of July 2025, they listed on their own stock exchange. But is it a good idea or a bad one? Let's break it down because the numbers are quite interesting and you might want to stick around for that. Firstly, why are they even listing? According to them, it's all about accessing capital, unlocking shareholder value, boosting brand visibility for its exchanges, the ZSE and the VFX, and strengthening corporate governance. Sounds good on paper, right? So, how do they make their money? ZSE Holding is basically the parent company for two key players, ZSE Limited, which runs the traditional Zimbabwe Stock Exchange, dealing in equities, ETFs, and even selling market data. Then there's VFEX Limited, a USD-denominated exchange focused on long-term capital and even looking into mineral commodity trading. Their revenue comes from listing fees, trading levies, and various other services. Now for the numbers, and this is where it gets wild. Their financial statements are a trip through Zimbabwe's economic roller coaster. We have seen massive nominal jumps in revenue and profits from 2022 to 2023 during the RTGS era. We are talking billions, which wasn't necessarily real growth and largely a symptom of hyperinflation. Then in 2024, the switch to the new Zimbabwe Gold ZWG currency caused numbers to shrink dramatically. And understanding this insane inflation and currency changes in Zimbabwe is key to making sense of these numbers. But here is the biggest red flag. For the 3 years straight, 2022, 2023 and 2024, their auditors have issued qualified opinions. This isn't just a minor note, it's a big deal. The main culprit there was problems with valuing their unquoted investments and even property and equipment. The auditors couldn't even determine the financial impact for 2024, stating it was material. This means there's a significant uncertainty about the true value of their assets. Plus, past issues with foreign exchange rate translations meant prior year figures might have been misstated. So while they talk a good game on corporate governance, these audit findings scream a disconnect between the policies and their actual financial reporting. So what does this all mean? While ZSE Holdings presents an exciting opportunity to invest in a growing African financial market, the recurring audit qualifications on asset valuations, coupled with the highly volatile economic environment, demand extreme caution. Besides, becoming a listed entity makes you a regulated entity on the market that you regulate, if that makes sense. Does it? I guess they really need that capital, isn't it? And also, investors need to ask, are these numbers truly reliable? And how can a company operate with such persistent financial reporting challenges? At least now they are listed, so we'll try to hold them accountable. Only if their main shareholder comes to these AGMs. And as always, remember to look beyond the surface because there's more to it than what meets the eye. But this is my own opinion. What do you think? Let me know in the comments, and as always, like and follow for more.